and more with Sahil Vachani, the CEO and MD at Max Ventures and Industries, who's woken up super early to join us live on ET Now, all the way from South Africa. Sahil, always a pleasure talking to you. This is Nantara. Good morning. Thanks so much for being live and making that extra effort. Really appreciate it. Let's begin with that announcement that has come in about the value unlocking. What is it that is going on? What kind of numbers are we talking about? And who's going to be the buyer?
Good morning, Nantara. It's a pleasure to be here. Thank you. This is a defining moment for us in our journey at Max Ventures and our aspiration of emerging as a pure play real estate company has now come to fruition. What we have announced late last night is the sale of our packaging business. We own 51% of it to our existing Japanese partners, Toppan, for a sum of at an enterprise valuation of 1,350 crores. This will give a realization of approximately between 600 and 650 crores to Max Ventures.
Sahil, you know, when you usually see value unlocking, a focus on a business which you have now decided is going to be real estate and the core business, as far as Max Ventures, you see a positive reaction on the stock market. Today, we've seen a negative reaction. Is it a thumbs down from the markets for exiting the packaging business, ending a partnership with a Japanese company? Or how are you reading this?
I think it's going to be very positive for the company in the long term. Please appreciate this is a step in making us a pure play real estate company with a war chest of 1,000 crores plus and no debt. I cannot think of more than a few companies that have this at a pan-India level, and definitely, hardly anybody in the NCR region. With our focus on real estate in residential and commercial in NCR, I think it's only a matter of time before we see significant value unlocking, for the stock.
I thought I should ask it because today we are seeing a cut and a gash on the stock down by about 11.5%. But you're saying there's nobody out there with this kind of zero debt levels that's going to be focusing on commercial as well as residential real estate. You're going to be a full focus real estate player. Tell us more about it, Sahil. Is the focus area going to be Delhi, NCR? Are you focusing more on residential? Have prices started to go up?
Our focus is going to be on Delhi, Noida, Gurgaon, and the greater NCR region. We, as you know, have started the commercial real estate business and have got a good track record, not just of creating, award-winning developments, but also setting the bar higher for customer experience, of demanding and commanding and getting a premium to the local micro market, which is about 20 to 25% and 100% occupancy for both our developments. So with this successful track record, the team and the capabilities in place, now this transaction enables us to get the capital war chest, like I said, of more than 1,000 crores of equity war chest to be able to grow the residential and commercial business in this micro market. We are going to be looking at all opportunities, which is outright, joint development, joint venture for land parcels in and around NCR to be able to scale the business. As you have seen, the real estate space is continuing to get consolidated. We believe the real estate space is on an upswing in times to come. And for developers like Max Estates, which have now the track record, the brand, the credibility, the trust, and more importantly, the ability to transform spaces that are customer-led and customer experience-led, I think there's a huge opportunity for a brand like us in times to come.
Would realty then be the largest revenue contributor for you going forward?
It will be the only revenue contributor, and yes, absolutely the largest. I should add that we have, the board has mandated the Investment and Finance Committee to find the suitable methodology to be able to list directly Max Estates through possibly a collapse of the holding company, Max Ventures and Industries and Max Estates, since post the transaction, the only business left under Max Ventures would be Max Estates and a real estate business. At a time where we are in the economy, in the business today, we believe that a pure play focused approach to any business is extremely important with the correct capital structuring that we have now been able to position ourselves and the track record that we have, we believe is the right ingredients that are already in place for this business moving forward.
For the markets, a very big factor for any realty business, Sahil, is always what debt do you have in your balance sheet. What can you tell us about the net debt across your residential business as of now on your books, and where is it that you see your debt to EBITDA headed going forward?
So today we have zero net debt, almost negligible, about 50, 60 crores of net debt actually, which is just lease rental discounting debt. Moving forward with what we are going to receive from proceeds of this transaction, we are going to be net debt zero. And like I said, with a significant war chest to be able to scale the business. And as you know, in the real estate business, that's a very important factor to be able to scale. And we have now been able to position ourselves from a capital point of view to be net debt zero moving forward and a significant war chest to be able to scale the business.
Sahil, good to have you in the show. Thanks so much for taking the time out and speaking with us. I'm sure we'll speak more.